In today's video, I'm going to show you how to add and use linear regression in TradingView. This powerful technical indicator helps you identify trend direction, potential support and resistance levels, and possible price reversals. Linear regression is essential for traders who want to make data-driven decisions based on statistical trends rather than just visual patterns. If this video helps, make sure to hit that like and subscribe button. Alright, let's get started. First, open your TradingView chart. You can do this by going to tradingview.com and logging into your account. Once you're logged in, make sure you have the asset or stock you want to analyze loaded on your chart. Next, click on the Indicators button at the top of your chart. This will open the Indicators library where you can search for thousands of technical analysis tools. In the search bar, type Linear Regression Channel. You'll see several options appear, but look for the one called Linear Regression Channel. Click on it to add it to your chart. The indicator will now appear on your chart with default settings. Now, let's customize the settings to fit your trading style. Click on the indicator name at the top left corner of your chart. This will open a drop-down menu. From that menu, select Settings. This will open the Indicator Settings panel where you can adjust various parameters like the period length, colors, and line styles. You can change the length to make the channel more or less sensitive to price movements. A shorter period will react faster to price changes, while a longer period will show the broader trend. Adjust these settings based on your time frame and trading strategy. Now let me explain what the linear regression indicator actually shows you and how to use it effectively. The linear regression channel consists of three main lines. The middle line is the linear regression line itself, which represents the average price trend over your selected period. It's calculated using statistical methods to show where price should theoretically be based on recent price action. The upper and lower lines form a channel around this regression line, showing standard deviations from the trend. These act as dynamic support and resistance levels. When price touches the upper band, it suggests the asset might be overbought and could reverse downward. When price touches the lower band, it suggests the asset might be oversold and could bounce upward. Traders use this indicator to identify trend direction, spot potential entry and exit points, and gauge price extremes. If price is consistently staying above the middle line, the trend is bullish. If it's staying below, the trend is bearish. You can also combine linear regression with other indicators like moving averages or RSI for stronger confirmation signals. The key is to watch for price interactions with the channel boundaries and use them to time your trades more effectively. And that's it. You've successfully added and learned how to use linear regression in TradingView. If this video helps, make sure to hit that like and subscribe button.